Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri. Joining us today is Rob Kirby of Kirby Analytics, a returning guest, someone who's been on the show before. We're going to be discussing the economy, precious metals, the stock market, Bitcoin's ascent, and how it's affecting sentiment out there. People are demoralized one way or another. Unless you're, just following the mainstream, just putting your money in their 401k and watching your real estate price, homes just continue to go up. Maybe you're not. Maybe you're just continue, and then maybe you're happy about the checks the government's receiving. It seems it's kind of all working out in a way, and I'll put quotations around that. We're gonna dissect the nuances of this with Rob today. Rob, thank you so much for coming on the show with me.
A pleasure being with you, Kenneth.
So many things to talk about today, to try to wrap our minds around what is happening right now. I think most of us would assume that precious metals should be much higher right now in this environment. If you would have described what happened in 2020 to me in 2019, hey, you're going to have trillions of dollars pumped into the system all at once, millions, billions of people locked down. I mean, a pandemic. I would have assumed gold would have been $5,000, but we don't have that. Instead, we have stocks really high. Real estate didn't crash. In fact, it went straight through the roof. Bitcoin is through the roof. And, here we are trying to make sense of it all. So what are your initial thoughts on this?
Well, people who are advocates of hard money and people who are very fond of precious metal as a go-to asset in the face of dramatic monetary debasement are very disgruntled and not happy because they are observing empirically Bitcoin behave and cryptocurrencies in general behave as gold historically has. But gold has been effectively stymied, and I'm going to say, to use a more dramatic word, gold has been crushed by, and no pun intended with the crush the street moniker, but gold has been crushed by officialdom because a rapidly rising gold price and or silver price is a failing grade to the stewards of the world's reserve currency, the dollar. And the appearance of gold or silver rising dramatically in nominal terms is a signal to the populace that the dollar is diminished in terms of its standing as the world's reserve currency. And this is something that officialdom does not want. This feeling or this belief is something that officialdom does not want to be instilled in the public at large. And because cryptocurrencies are new, it's been allowed to occur, and largely, if nothing else, Kenneth, because in the wake of all the money that's being created, and we can elaborate more on this in a little bit, but let's just say a good measure of how much money is being created is typically viewed as being synonymous with the expansion in the Fed's balance sheet. And if you believe the Fed's balance sheet, you might be led to the belief that we have $7 trillion has been created since the start of this COVID scare. Well, the reality is, if you're a follower of the work of Dr. Mark Skidmore and Catherine Austin Fitts, which I certainly am, one of those people, Dr. Skidmore's latest work shows that $400 billion in investable assets under the umbrella of the Social Security Trust Administration in the United States of America. So we're talking 400 billion in investable assets being managed for the retirement of retirees in America, and that 400 billion in the latest year where data is available from the government shows that they had a churn or a turnover of $44 trillion on that base of 400 billion in assets. Well,
so explain that. 44 trillion. So it's cycled through, it expanded. I mean, we saw a lot of money expansion as the trickle effect.
Like, no, Kenneth, let's put it this way. If you open up an account at Schwab and you put 100,000 US dollars in it, and if suddenly in a year, through your buying and selling, you turn that $100,000 over 300 times, I'm going to suggest to you, you probably don't have 100,000 anymore. You'd be lucky if you have any, because if you're trading that much, you're probably gonna have zero, because turning over your entire portfolio 300 times in a year is not the way to make money. It's a great way to lose money. And retirement assets, typically, if there's any asset on the planet that is a buy and hold asset, it's typically going to be a retirement asset. Retirement assets, by their very nature, are not turned over and over and over and over and over 300 times in a year. So this is completely and utterly ridiculous, and it shows that. Let's just put it this way: 400 billion in assets having a turnover of 44 trillion in a year is a crime scene. It's not an investment. It's a crime scene, and whoever is turning over that quantity of assets in that period of time, that many times, that's a criminal activity, and I don't even need to explain. I don't think I should need to explain to people why that's criminal. That's just simply not the way retirement assets are managed, period. Right. So it doesn't fit, and it reeks of impropriety, it reeks of fraud, it reeks of criminality, and you know what? And nobody says a word. And Dr. Skidmore has asked the government repeatedly for explanations as to how this could happen, and they won't explain. So, you see, the thing I'm saying, Kenneth, here, I don't want anyone to believe that I'm putting words in Dr. Skidmore's mouth, because these aren't his assertions. The assertions that this is fraud and criminal are my assertions, because I know that's not the way retirement assets are managed, and that just reeks. You see, it's the notion that 400 billion gets turned over to the tune of 44 trillion in a year. It's more believable that elephants can jump through keyholes, and they can't, and it doesn't happen in the real world. And in the real world, legitimately, 400 billion isn't turned over to the tune of 44 trillion in a year. And anyone who tells you that that's indeed the case, they're hiding something colossally criminal from you. So the whole stewardship of retirement assets and the Social Security Trust Fund, to me it's very, very likely that this is a front for extreme money creation. So while money creation in the last year would indicate that maybe 6 or 7 trillion that's attributable to the expansion in the Fed's balance sheet, I suspect very likely the real amount of money that's been created in the last year might be 25 or 30 trillion. So, and you see, Kenneth, if one stops to consider what has occurred in the last year, I mean, at the beginning of last September, we had gold at $1,900. We had Bitcoin at $9,000. And what has happened since then? Well, gold has gone down and Bitcoin's gone from 9,000 to 55,000. And what else has happened? Well, the stock market has gone from, I don't know, it's gone to, let's talk S&P. The S&P was roughly 32 or around 3,000. What are we on the S&P today? I think we're over 4,000. We had a 10-year bond yield at the end of 2019 at 1.80. By the end of the first quarter of 2020, we had a 10-year bond yield at 60 basis points. Okay, all of these things that I'm citing here implicitly mean that wads of money have been thrown at the stock market, wads of money have been thrown at the bond market, and wads of money have been thrown at the crypto market. Now, it seems to me that the rapid advance in the crypto space, and the poster child for the crypto space, of course, is Bitcoin, but it's not the only crypto that's gone up. Many cryptos have gone up by factors of hundreds in this time frame that we're referencing here. But let's just say the U.S. government, or her, let's just say Her Imperial Highness Janet Yellen, former chairwoman of the Federal Reserve and current Secretary of the Treasury in the United States, she's clearly alarmed at the way cryptos are behaving, because it was a couple of weeks ago that she floated a threat that U.S. financial institutions might be subject to criminal prosecution for helping entities launder money through cryptos. Well, I mean, that's really all well and great, Janet, but you know, the currency du jour for criminals has been the US dollar for decades and decades and decades, and monetary authorities have done little to nothing to impinge on that or to prevent criminals from using dollars as currency. And the reason for that is because America's biggest export to the world, and a lot of people would think naturally that it's arms, but the real American export is dollars. And flooding the world with dollars is goal number one for any Secretary of the Treasury of the United States of America. And then what else did they do in the last 10 days to try and scare the bejeepers out of people holding cryptos? They floated the notion that there'd be new capital gains tax, a special tax put on people who make money trading cryptocurrencies. So let's just say the behavior or the rapid upward appreciation of cryptocurrencies has scared the living daylights out of monetary authorities in America, because they seem to be putting threats of actions to people who are engaged in the trade. And then if you want to stop and really think about it, the volume of trade in Bitcoin on a daily basis is literally off the charts, to the point where we're talking trillions of dollars in turnover a year in one cryptocurrency alone. And to me, that speaks directly to the notion that Bitcoin and cryptocurrencies are being used to settle international trade accounts. And I truly believe this is the case. The evidence is overwhelming that this is indeed occurring. And the people that are engaged in this trade are China, Iran, and Venezuela predominantly, and Russia's probably a player as well. And take note of the names I just mentioned. These are all countries that America has big problems with. And why do they have big problems with? These are all the countries that America has imposed sanctions on. They have sanctions on China, they have sanctions on Russia, they have sanctions on Venezuela, and they have sanctions on Iran. And basically what they've done by imposing these sanctions is they've cut these countries off from being able to clear dollars. US dollars, which up until recently have been the exclusive domain of in global trade. Like oil trades historically, at least for the last 50 years, oil trades in dollars. And to settle your trade in dollars, you need to have access to the SWIFT system. And the SWIFT system is US dollar centric, and it requires the Federal Reserve, specifically the New York Federal Reserve wire room, where dollars are settled, where they're transmitted from, sent from, or received to, and then to the clearing banks, whether it would be a Morgan, a Citi, a B of A, or et cetera. So in effect, what American sanctions have done to countries like Iran and Venezuela, it's meant that dollars are of no use to them because they can't transact dollars. So with necessity being the mother of all inventions, these countries have adopted a new means to settle international trade accounts. And they're using cryptocurrencies, which are outside of the dollar system. They're using cryptocurrencies to settle their trade. So the way it works is China wants and needs energy. They buy energy, they buy oil from Iran, they buy oil from Venezuela. Iran and Venezuela don't want dollars because they can't trade dollars. So they take in the cryptocurrency in exchange for their oil. Then they're long cryptocurrency, and they turn around and they then buy the goods and services they need from China, and they pay for it in cryptocurrency. Thus, we've established a new loop of trade, if you want to call it that, where countries are operating completely outside of the dollar. China, Iran, Venezuela, and I would suggest to you there are other countries that have jumped on that wagon too. And that explains the absolute mushrooming of cryptocurrency volume. And it also explains why the dollar has weakened. And it also explains why gold has remained moribund along with silver, because those are dollar trades. You see, you can't phone up the LBMA, which is the London Bullion Market Association, or the COMEX and say, I'd like to buy 10 tons of gold with Bitcoin, because they don't take Bitcoin at the LBMA or COMEX. Those are dollar-centric institutions, and they only take dollars. You want to buy a gold futures contract, or if you want to buy unallocated gold, which is ridiculous anyway, but if you want to buy anything from the LBMA or the COMEX, you got to pay in dollars. Well, guess what? These guys can't transact dollars, and roadblocks have been put in their way to prevent them from transacting in dollars, so they're now transacting in something else. And this has rankled the likes of Janet Yellen and the stewards of the US dollar.
Rob, it's interesting because you mentioned in the beginning how gold has collapsed. Now, gold, if you look at a chart, it's done relatively well, right, since 2015. I mean, it's been moving higher. But what's interesting is, and what resonated with me is it's collapsed in relation to the amount of money that's been printed. And as you pointed out, it's ballooned way beyond maybe what the given statistics and the numbers are. So maybe just touch on that and the opportunity, if you will. At least I think it's a big opportunity. I think my emotions, my human emotions are there with everyone else. Like, who knows how long they can continue to keep this down and keep this going. If gold isn't going to go up in the face of what we've seen, when will it ever go up? You know what I mean?
Gold,
like those are questions that we're all asking ourselves.
Okay, Kenneth, point well taken. And I'm not discouraged with gold, and I think owning physical ownership of precious metal, not futures, but literally owning coins and bars and keeping them in your own possession, I think is vital to your long-term financial security. And the reason I feel that is that the suppression that's ongoing in precious metal, to begin with, we know it's being severely suppressed because there's been a departure, a very dramatic departure from the false futures price as depicted by COMEX and LBMA, their daily fixes, and the futures exchange prices, and what people have to pay to procure physical metal. The spreads have ballooned, and the availability of physical metal has been highly suspect, if available at all. And I know this because I'm directly involved in procurement of metals for entities, and have been for a very long time. And the premiums that are currently being paid to procure and obtain physical precious metal are at all-time record highs. So, I mean, what good is it to have a futures price of gold, and then to be able to buy an ounce of gold, you've got to pay $150 more than what the advertised, and I'm going to call it the phony price, as depicted by the COMEX futures price. Silver, we're seeing silver trade anywhere from, say, 15 to 20 and 30% higher than the spot price to obtain physical ounces. And that tells me that this fraud won't continue forever. And the real issue, Kenneth, is when this fraud becomes completely and utterly unsustainable, which it will at some point in time, the people doing the rigging and the fixing, for fear of probably being hung from lampposts, will cease in their diabolically evil activity. And at that time, you won't be able to buy physical metal with fiat money. So this is where we're headed. I don't know how quickly we get there, but my attitude is, if you don't own physical metal before this blatant rigging ends, you won't get any. So you got to own it beforehand to be in the game on the day when this blatant suppression ends. And all I can say is, anybody who denies the suppression of gold and silver at this point is an utter fool and a moron, or complicit in the suppression, which makes them a criminal. And good luck to you.
You know what's interesting is watching the psychology of the market, and especially with something like Bitcoin or what's happening in the stock market. You can see people's human emotions when it comes to an asset that's moving. And, you know, trying to get into Bitcoin right now is like trying to jump on a moving train. You know, obviously, in hindsight, buying Bitcoin at $10,000, you were a genius. But, you know, and then a lot of people are very curious to it now, and they want to buy it and they want to get in. But now it's like jumping on a moving train, and it lends itself to, hey, I believe there is going to be the moment for gold and silver where silver is not going to be below $30 and gold is not going to be below $2,000. And as it starts to build that momentum, it will feel like jumping on a moving train, wanting to get in. People will fear missing out. And it's so much better to be positioned in early and not even have to worry about it when it is having those moves.
I couldn't agree with you more. I mean, people need to realize, at least I believe people need to realize, cryptocurrency is only doing what gold and silver historically would do, but are being prevented from doing now. But so much money is being created, it has to go somewhere. Like, if I spill 2 quarts of water, the water goes somewhere. Like, it doesn't evaporate before it hits the floor. And so it needs to find its own level. It needs to flow somewhere. The amount of money that's being created today, Kenneth, it needs to go somewhere. And it's being prevented from going into precious metal, observably in the futures markets anyway, because you see, in the metals markets, there's a severe shortage of physical ounces, but there has never been a shortage of gold and silver contracts because those are available in infinite supply. It doesn't matter how much money you have. If you want to buy gold futures, you can buy all the gold futures in the world, and there's absolutely never a problem with supply. And it seems to me the more demand there is for gold and silver, the lower they drive the nominal price as expressed in the futures market, because the futures market can't tell the difference between a physical ounce and a fictitious ounce that's created out of thin air. See, and that's the whole problem. People don't understand, and a lot of people don't understand. Look, we have world famous money managers. Take a guy like Ray Dalio, for instance. He's an advocate. He's been an advocate of gold for a very long time, but he seems to think that if he buys COMEX gold futures, he's got a real position in gold. Well, he doesn't. He has a position in gold futures, and you know, the day the train leaves the station, and someone like Ray Dalio decides they want to convert all their gold futures into physical ounces, he's going to be told, "Good luck. Sorry, not doing that. But we're going to be more than happy to settle you up in fiat currency, and then you're going to be left with a bag full of fiat currency, which might be worth at that time the same amount as a bag of confetti." So, but this is where we're headed, and this is all due to the amount of fiat money that's being created, and the amount of fiat money that's being created this year will necessarily be. They'll necessarily need to create more than that next year, due to the wonders of compounding, and to understand what compounding does to a fiat money regime. I would recommend everybody Google the name Chris Martenson and Crash Course. Watch the video expose that Chris Martenson put together back in 2009. Which explains the wonders of compounding and the effects of compounding, which basically is an explanation of the life cycle of a fiat currency regime with interest. And any fiat currency regime with compound interest ends up in an unsustainable position where literally geometrically more money is required with each passing year to service the existing debt or the existing interest on the current stock of money. You see, when fiat money is created, Kenneth, the interest due is never created when the principal amount is created. And that implies that money supply must grow. It has to grow as long as you have interest due on money that's created. All money is lent into existence. So when a new loan is made, if you borrow $1,000, you're going to pay interest on that amount. That interest is not created when they give you the 1,000 or create the 1,000 out of thin air. Well, that means that they have to create more money and more money again so that the interest can be paid on the existing pool of fiat, because it's all lent into existence. And where that ends up, or where you end up with a money regime like that, is you end up typically with slow growth upward to the right for a period of time, and then you reach what we call an inflection point where the amount of money in existence goes vertical. And we're on the vertical curve now. And the amount of money that's required with each passing year is very much bigger than the amount that was created in the previous year. So money growth is much bigger than what is admitted to us little people. And this this again circles back to the notion that and Dr. Mark Skidmore's work is highly supportive of this view that I'm expressing, that increasingly more money needs to be created. So, and to put this into context maybe a little bit better, Catherine Fitz and Dr. Mark Skidmore initially did work covering the period 1998 to 2015 using government numbers. And in two government departments, namely the Pentagon, or the Department of Defense, and HUD, Housing and Urban Development, they identified $21 trillion in what they referred to as missing money. These are unexplainable accounting adjustments that were made in the books, in the government's books, over a period of, that would be 98 to 2015. So that's over a period of 17 years. 21 trillion in money that they can't explain where it went. Well, and the other thing I'd just like to draw everyone's attention to, the day before 9/11, one day before 9/11, it was none other than Donald Rumsfeld, the defense head of defense, who admitted that there was over $2 trillion missing from the Department of Defense alone. But then on 9/11, when the Pentagon was hit by, they claim it's a plane, even though there were no plane parts found outside outside the Pentagon, the plane disappeared. But the area of the Pentagon that was hit on 9/11 was the exact area where all the accounting was done for the missing $2 trillion that was documented the day before by Rumsfeld. So that's $2 trillion that just went up in smoke. Anyway, getting back, so it was 21 trillion missing from 98 to 2015. Dr. Skidmore's latest work deals with the year 2019, I believe. And in that 1 year, it's highly, highly believable that there could be as much as 25 or 30 trillion missing in 1 year. So you see, the amount of money that's going missing, or that's unexplainably not present, is growing in seriously large amounts as the years go by. And this year's problem will be bigger than last year's problem, and it will be bigger than next year's problem. And it's amazing the way Chris Martenson explains this, because the way he explains it, to show the power of compounding, he says if you start with a drop of water in Yankee Stadium and you double the amount of water every minute, how many minutes before Yankee Stadium is completely full and overflowing at the top? And the answer to that,
I don't know that answer, but I bet it's like one of those compounding, doubling a penny.
That's right. So understand, when you're doubling the amount, you're compounding the amount, you're doubling it every minute. It takes about 45 minutes for Yankee Stadium to be completely full. But the amazing thing of it is the action all happens in the last 5 minutes, because after 40 minutes, the water's only up to the ankles of people on the infield. It's the last 5 doublings where the water eclipses and overflows the stadium at the top of the stadium. So you see, we are rapidly moving towards that last 5 minutes with the money, where, I mean, literally, the amount of money that needs to be created to keep the fiat system functioning has become so onerous. They have problems in terms of where to put the money. Like, where do you put the money when you have to create that much? When you have to create more money this year than has been created in all the years past, from the time of Christ, or from the time of America's creation to now, when you have to create more money than's been created in all of American history in 1 year, you see, that becomes unsustainable. Like, it becomes too big. You can't hide elephants under doilies. You can't hide elephants under rugs. They're too big. And the money problem due to compound interest that the stewards of the world's reserve currency are currently experiencing is unbelievable. And you see, when countries start settling international trade accounts in other than dollars, it makes it even harder. And this is why sabers are rattling. And this is really what's at the true nub of the geopolitical tensions in the world. It's not because we hate Chinese people. It's not because we don't like Russians. It's not because we don't like people in the Middle East. It's about the money. The money stinks. We have bad money and we have dishonest commerce because the keepers of the current money system are corrupt beyond belief, and they're trying to hold on to a dying empire. And the dollar empire is dying in front of our eyes.
Rob, last question. Can stocks, can real estate simultaneously continue to be a hedge against this inflation? Sure, fundamentally, maybe they don't make sense, but if they're going to print all of this money, won't these assets go up in relation to dollars?
Well, these assets, they don't go up in relation to dollars. They go up because they're priced in dollars. And what's occurring is we are hyperinflating the money supply. So in nominal terms, yes, prices can continue to go higher. So, I mean, you see, the funny thing is, I have some big numbered fiat banknotes here. You see, and I can pull this one out. I can pull this one out right here. That is 100 trillion Zimbabwe dollars. Okay, 100 trillion Zimbabwe dollars. You see, the Zimbabwean dollar in 1990 was worth around 80 cents American. Okay, but this is 100 trillion of them. And if you had 6 of them, you could buy 3 eggs. So, if you're asking me, can the price of eggs go up in dollars if they keep printing more and more of them? Of course it can. But if you're counting your wealth based on what you have in your bank account today, like people that owned $1 million Zimbabwean dollars in 1980. They probably had a secure retirement, but by 2003, with 100 trillion Zimbabwean dollars, you couldn't buy an egg. So, so can the price of the stock market continue to go, or the value of the stock market continue to go up in nominal terms? Yes, but what purchasing power will those dollars have? You see. And that's the amazing thing, that precious metal has always stood the test of time, because there's classic tales, about gold. An ounce of gold in medieval times, an ounce of gold in Roman times would buy an ensemble for a male, which is the equivalent of a suit, a belt, and a pair of shoes and a shirt. Like, you could be outfitted with call it a toga, a sash, and a pair of sandals in Roman times with an ounce of gold. In 1920, when gold was officially at $20 an ounce, when we were on a gold standard, $20 would buy you a suit, a belt, and a pair of shoes. And the funny thing is, today with gold at $1,900, actually it might be challenging today to buy a suit, a pair of shoes, a belt, and a shirt today for $1,800 or $1,900. And I mean, that alone is telling you that maybe gold should be higher. So gold remains constant. You see, so like what I'm saying is, in 1920, gold was $20 an ounce, but $20 would buy you those goods, the ensemble. Today, the same ounce of gold, it's measured at 1900 or 1800, whatever it is. And you see, the ounce of gold hasn't changed. It's just the purchasing power of the dollar that's diminished. So it takes a lot more dollars. And as they continue to print more and more currency, nominal prices will continue to go up. But the real question is, what's going to go up quicker? Is the price of a house going to go up quicker? Let's just say during the hyperinflationary period in Germany, house prices didn't do as well as you might think, because people's mortgages, a lot of people who owned real estate felt that if they had borrowed money in Reichsmarks, which was the currency of the day, if they were going to pay off a big loan that they had taken out on a house, they could pay it back in depreciated dollars. That's not the way it really worked, because you see, the bankers who are in control, they changed the rules for the Germans, and they benchmarked the mortgages or the loans to the price of gold. So if you took out a big mortgage in Reichsmarks, and then the price of housing started to go up dramatically, and you thought, well, that's fine. I've locked in. I borrowed $500,000 Reichsmarks, and I'll pay them off when the Reichsmark becomes worthless. Well, it didn't work out that way. You know, what they did is they marked to market the interest due to the price of gold, so that you were basically like a gerbil on a wheel, and you had to run faster and faster and faster to keep up with the inflation, because they changed rules. And boy, sounds like rules are on the verge of being changed right now, doesn't it? Where cryptos are concerned. Oh, we had an old tax regime, but you guys are making too much nominal return on your crypto investments. Oh, we have a new tax for you. Oh, and and the people that you're doing that are helping to facilitate this trade, they're all going to be charged criminally for laundering money. So you see, rules get changed by the people who make the rules, and the people who make the rules are the people who have their hands on the levers of power where money's concerned. And we see this repeated over and over and over again as successive regimes of fiat money continue to fail. Every fiat money regime ever invented has failed. They have a perfect batting record. And that should tell you something about fiat money right there in itself. I mean, have you ever met a baseball player who bats 1,000?
Not at all.
Doesn't happen, does it? I mean, the best in the business, how many times in the world has anyone ever even batted 400? I think record is maybe 400 once. Well, you know what? Fiat money bats 1,000. It always fails. Gold has never ever failed.
Yeah.
See, if fiat money regimes, all fiat currencies ultimately end up at zero. They all go to zero. That's their true intrinsic value, zero. And they all find that true intrinsic value. It's just a matter of how long. Gold's never gone to zero. Silver has never gone to zero. That's why they're money. And you know what? And the jury's out on cryptocurrencies. Are they ever going to go to zero? I don't know. I have trouble believing that Bitcoin's going to go to zero.
Yeah. You know, Rob, it's such a nuanced, interesting thing. And I think there's a lot of control. And I'm shocked at how much the system is controlled to the degree that we've gone this far, if you will. It's definitely out of control, but the fact that it's gone this far without seeing those things it blows my mind. And it's very interesting to me to see what we've seen in gold and I know we've made these comparisons to Zimbabwe, hyperinflation, and to just continue to see gold where it's at. A lot of people have thrown in the towel. I mean, I'm seeing mainstream once gold people really start to question gold's role as a safe haven asset. And I'm with you. I think gold isn't going anywhere. And if anything, now what else is out there that you could buy that's as quote unquote cheap as gold compared to the increase in the money supply. I don't think there's anything else out there aside from,
Well,
undiscovered small investments that people might be aware of. But on a large scale sector basis, there's really nothing else out there that we can be looking at that has as much
yeah,
potential as gold, in my opinion.
Kenneth, we're living in very strange times. There are people who say, well, or who are not believers, or maybe who haven't studied it close enough, but we're living in very strange times. And my assertions about the money, while some people might have trouble believing that this is indeed the case, you see, I equally have trouble believing that somebody who didn't win an election can occupy the White House. You see, we have new terms for things all the time. We used to have a title called the President of the United States. Now we have the Pretendant of the United States of America, because the person occupying the White House, if he indeed actually lives in the White House, because I think he's more akin to the basement of dwellings as opposed to floors above ground. But the Pretendant of the United States is now assumed to be occupying the White House. And I mean, this is atrocious. And I mean, if that can happen, anything can happen. So here we are. The monetary system is in shambles, and everything we see pertaining to management of the monetary system only reinforces the notion that the system is severely broken, and it's a colossal mistake. And the actions we see countries around the world taking are only reinforcing that fact. The monetary system is broken, and people are looking for alternatives, and alternatives are being created at breakneck pace because the belief is becoming more and more widespread that the dollar is toast. And I'm in that camp.
Rob Kirby, everyone, of Kirby Analytics. Rob, if people want to learn more about you, the work you do, please let them know where they can go and what they can expect.
You can catch me on the web at kirbyanalytics.com.
Absolutely. Well, everyone, check out Rob's work there. And Rob, thanks so much for taking your time here with me today and just sharing with us. I mean, my goodness, it was a breath of fresh air to kind of wrap our minds around what is going on, because again, I think a lot of people are questioning what's happening and rethinking their thesis based on what we've seen. But it's a good reminder for us to stick with the trade and don't get washed and rinsed with the markets, because that's what we've been used to doing. And in a way, I mean, people are used to getting in at the wrong times and selling at the wrong times and have nothing to show for it, even with the right theoretical economic analysis. So without belaboring this anymore, Rob, thank you so much for coming on the show.
It's been my pleasure.